non-profit organizations or NPO. We will discuss here one example of non-profit organization, which is club. The club accounts include two types of accounts, which are receipts and payment accounts, income and expenditure accounts. So, the club accounts include two accounts, which are receipts and payments accounts, income and expenditure accounts. Clubs, associations, and other non-profit making organizations don't have trading and profit and loss accounts drawn up for them, as their main purpose is not trading or profit making. So, the clubs or any non-profit organization don't have trading and profit and loss accounts because their main purpose is not trading or profit making. The kind of final accounts prepared by these organizations are receipts and payments accounts or income and expenditure accounts. First, receipts and payments accounts. The characteristics. Number 1. The receipts and payments account is a summary of the cash book for the period. We will record all cash receipts during the whole year on its debit side, whereas we will write all cash payments for the whole year on its credit side. So, in the receipts and payments accounts, we will record cash receipts on the debit side and the cash payments on the credit side. We will record only the cash transactions in receipts and payment accounts. The difference between the total of the debit side and the total of the credit side will be the closing balance of the cash or bank. The receipt and cash payment account for the year ended 31 December. The receipt and payment account as shown is a T account, on which the receipt on the debit side is recorded and the payment is recorded on the credit side. In the receipts and payment account, we record only the cash transactions. Okay, so in the receipts, we will record bank balance for the 1st of January, 12,000, subscriptions received 6,000, rent received 2,600, donations 500. So, in the debit side, we record all the cash receipts, while in the credit side, groundsman's wages 7,000, sports stadium expenses 3,000, committee expenses 600, printing and stationery 400. So the credit side includes the cash payments. The total of the receipts is 21,100 and the total of payments are 11,000. There is a difference between the debit side and the credit side. The difference between the total of the debit side and the total of the credit side will be the closing balance of the bank balance. It will be credited at the bank balance at 10,100 to make a balance between the receipts and the payments, between the debit side and the credit side. We have credited the bank balance because the receipts which is the debit side is more than the payments in the credit side. The bank balance, which is 10,100, is the balance at the end of the year, and it also will be the beginning balance of the next year or the next accounting period. But if the credit side is more than the debit side, the amount will be debited as bank account. We have mentioned if the debit side is greater than the credit side, the amount of the bank balance will be credited. Okay, while if the credit side is more than the debit side, the amount will be debited. The second account is the income and expenditure account. A receipt and expenditure account only shows the amount of money entering and leaving an organization, which indicates the income received by the club or association is more or less than what it has spent. So the income and expenditure, its purpose to determine the income received by the club and what is spent by the club. Characteristics. Income and expenditure account is a summary of income and expenditure of a not-for-profit organization prepared at the end of an accounting year. It helps to enable the members to know the working of the organization and to know whether its income is sufficient to meet its expenses. So, the income and expenditure account helps to enable the members to know whether its income or the organization, non-for-profit organization income is sufficient to meet its expenses. Its reality, it's very similar to a trading and profit and loss account used by the profit-oriented firm. So the income and expenditure account in non-for-profit organization is similar to the trading and profit and loss account in the trading organizations or the profit-oriented firm. The differences between non-profit organizations and profit organizations in relation to the main accounts. In case of profit-making firm, it prepares trading and profit and loss account, while in non-profit organizations, income and expenditure account is prepared. Net profit, net loss, cash book in case of profit-making firm, while in case of non-profit organizations, it will be surplus of income over expenditure, excess of expenditure over income, and receipts and payment accounts. The accumulated fund. The accumulated fund is the equivalent of the capital of a profit-making organization. An accumulated fund is the capital fund of a non-profit organization. Money is directed into the accumulated fund when revenues are greater than expenditures. So, in the profit-making firm, the accounting equation will be as follows. Assets equal capital plus liabilities, while in non-profit organizations, the accounting equation will be assets equal accumulated fund, which is equivalent of the capital of a profit-making organization plus liabilities. Now we will talk about profit and loss for a special purpose, not for the club as a whole. Sometimes there are reasons why a non-profit making organization would want a trading and profit and loss account. This is where something is done to make a profit. However, the profit is not kept, but it's used to pay for the main purpose of the organization. For example, a trading account may be drawn up for a club core that is aiming to make a profit that can be transferred to the income and expenditure account as an income. A club can prepare a profit and loss account for profit-making activities such as bar and restaurant. All related revenues and expenses are entered in a special purpose profit and loss account, and the profit and loss is transferred to the income and expenditure account. Now, drawing up an income and expenditure account. We can look now at the preparation of income and expenditure account. This is drawn up on the basis of trial balance. Here we have a trial balance at 31 December for football club. Debit side, credit side, and the items. Sports equipment, asset at the balance sheet for 85,000. Club premises balance sheet 296,000. Subscriptions received revenue, income and expenditure statement 35,321. Sales of party tickets, income and expenditure statement 6,000. Wages of bar staff, bar income statement 47,500. First we have balance sheet, income and expenditure statement for the whole club, and wages of bar, which is for a special purpose. It will have bar income statement, special statement for the bar. Okay. Furniture and fittings balance sheet 52,600. Rates and insurance, income and expenditure statement 19,100. General expenses, which is expenses 4,050. Party expenses and accumulated fund at 1st of January as balance sheet. It's given 4,160. Donations received, income and expenditure statement 3,600. Telephone and postage, paying for purchases, creditors for power supplies, power sales, power income statement, power stock 1st of January, income and expenditure statement. Then he put the total of each side 640, 731, 640, 731, and he gave me also the following information. Number 1, power stock 31 December is 23,620. Number 2, provide for depreciation. He gave me also the depreciation for the sports equipment 17,000. Furniture and fittings 1,350,000. First, we will prepare income statement for a special purpose, which is the club bar. The football club bar income statement for the year ended 31 December will be as follows. First, the sales, which equal 168,250, less cost of sales. The cost of sales is calculated as follows. Opening stock 32,241 plus bar purchases 95,720 less closing stock 23,620. So the cost of sales is calculated by adding the opening stock to the bar purchases and subtracting the closing stock. So the cost of sales will be 104,341. Okay, so the sales minus cost of sales will be 168,250 minus 104,341 will be equal 63,909 minus the expenses, wages from par 47,500. So the profit from par will be 16,409. This profit will be transferred to the income and expenditure account as an income to the whole club. Then we will prepare income and expenditure account for the year ended 31 December for the whole club. The income and expenditure account for the year ended 31 December will be as follows. The income first, profit from the bar, which we have calculated in the previous income statement for the club bar, 16,409. Subscriptions 35,321. Donations received 3,600. Profit from party, which is revenues minus expenses, and they are recorded or they are mentioned in the trial balance before. 6,000 minus 2,000, which equals 4,000. So the total of the income will be 59,330. Then we will subtract the expenditures, and the expenditures will be as follows. Rate and insurance 19,100, telephone and postage 4,480, general expenses 4,050, depreciation of furniture 13,150, depreciation of sports equipment 17,000. So the total of expenditure will be 57,780. So the income, which was 59,330 minus the total of expenditures 57,780 will be 1,550, which is surplus of income over expenditure and not excess of expenditure over income. Then the balance sheet for the whole club at 31 December. Fixed assets, historical cost, depreciation, net book value. The fixed assets from the trial balance: club premises 296,000, there is no depreciation. 296,000, the net book value. Furniture and fittings 52,600 minus depreciation 13,150, so the net book value is 39,450. Sports equipment, the historical cost 85,000 less depreciation 17,000, the net book value will be 68,000. So the total fixed assets will be 430,450. The current assets for stock 23,620, cash at bank 2,040, so the total will be 25,660. Current liabilities: creditors for power supplies 10,400. We will subtract the current liabilities from the current assets to get the working capital. The working capital equals current assets minus current liabilities. So 25,660 minus 10,400 will equal 15,260. Then we will get the total net assets, which equals total assets minus total liabilities. So the total net assets equals 418,710. Then the accumulated funds at 1st of January, it's mentioned in the trial balance, it's given 417,160 plus the surplus of income, which we have calculated before, 1,550. So the total of sources of finance will be 418,710. So there is a balance.